Hey, it's Mike Belfor, American Pacific Mortgage, and we're doing our first time homebuyer workshop for Maine this evening, and want to guide you through that process. So curious, before I start, I usually like to ask folks, where you guys from? Portland, South Portland, Auburn, okay, Lewiston. Great, 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 great. So, all right, well, we're going to record this just so you guys know. We're going to do questions and answers after this, right? I'll stop recording when we do that. But yeah, without further ado, let's get this thing moving here for you. So, without further ado, here is our home buying seminar. And so, this is about myself, in case you're wondering. I'm here in California, but we do lend throughout the country, and that's why we're presenting this here for you, where you are. And here's how to contact me, right? I've been doing this for over 2 decades, and we've done pretty well. Our company, American Pacific Mortgage, the company I work for, does incredibly well. It's been around for 30 plus years, and really, our whole idea here is what can we do to help bless people and create experiences that matter, help with the home buying process. So without further ado, here's our agenda. A lot here, Kelly, but 10 basic things, really. Shouldn't take too much time for us tonight. And, is everybody excited to be here? Excited to have you guys learning new stuff, right? So this will be good. I'm excited to have you guys, and thank you so much for joining us. But here's the agenda. We're going to go over the housing market today. Should you buy now or wait? We're going to look at home buyer assistance programs, buying versus renting, how you develop wealth through real estate, credit and loan programs, winning today's market, right? 2026, different market. And then the buying process, some, common first-time homebuyer mistakes. Then we'll do questions and, we'll talk about setting your personalized game plan after. I have a QR code. If you want to schedule time to speak with me. So I'll do that. And actually right now I'll include just my website in this chat window here for you guys. But all right, so today's market, what's really happening, right? The housing market isn't easy right now. We know that inventory in a lot of markets remain limited and affordability can be a challenge. Interest rates remain higher than most have expected, right? But at the same time, buyers face less competition than they did during the frenzy years. Sellers often offering concessions and credits. Actually, I'm seeing seller credits in some cases if you're using like a down payment assistance program, which we will talk about, um, coming in with little to nothing, sometimes nothing down at all, other than that first initial deposit that's made on the sales contract. In some cases, is minimal as well. So the goal here isn't to perfectly time the market. The goal is to make a smart decision when you're financially ready. So why are still why are people still buying houses? Now, keep in mind, homeownership offers benefits that renting cannot. There's stability. Fixed rate mortgages provide that payment stability, and you can control your housing situation. There's wealth building. Every payment can help build equity. Homeownership remains one of the most common wealth building development tools in America. Feature flexibility with refinances, appreciation. And the biggest question really isn't where are the rates? The biggest question is, does buying make sense for my situation? So really your local market. Let's talk about where you are. National headlines matter, yes, but your local market matters more. Inventory levels, competition, pricing, seller concessions. I mean, on the national level, they vary significantly from one city to the next. But where we are and where I'm teaching this class, candidly, it's you're getting a lot of opportunities out there, which is really great, right? So some buyers are offering, yes, we're seeing in some markets, or should I say, multiple offers. Well, others are negotiating credits, repairs, closing costs. They're, as I mentioned before, down payment assistance. I had a client just last week close on their transaction with nothing down. The seller paid their closing costs. They got their earnest money back after closing. These are possibilities here, right? So it's kind of cool. The key to is really understanding what's happening in your market and building a strategy that fits your goals. And we'll talk about that in a little bit. But the key takeaway here is don't make a home buying decision based solely on national news or headlines. Make it based on your local market, finances, and what your personal long-term plans are. So what's the outlook going forward? Nobody knows exactly where rates or prices will go. What we do know is that inventory remains historically tight in many areas. Demand still exceeds supply in numerous markets. Population growth and continues in generations, and we're seeing a lot of people move out of state, even where you are, right? We're hearing that. And then buyers who benefit are usually the ones who are creating a plan rather than waiting for perfect conditions. There are opportunities for buyers who are prepared and ready to act. So this is the big question I get daily and throughout the day. Rates move every single day. That's perspective. They're impacted by inflation, the Federal Reserve policy, employment reports, bond markets, and global events like what's happening as I record this on June 3rd, 2026, right? So the important thing to remember here is the rate that you see online is not necessarily the rate that's available to you. Rate that you get in the mail, maybe not available to you. Your financing is personalized. And a lot of times they do these as teaser rates to get you to call, right? So keep that in mind, but it does change day by day. It could be something you see in a flyer from last week, right? Versus what's available today, because what we're seeing is a lot of headlines, which is causing the markets to shift rapidly. So what determines your rate? Every buyer is different. Factors include credit score, down payment, loan program, occupancy type, property type, loan amount. And our job here at American Pacific Mortgage is to help you evaluate those options and build the best strategy for your goals. So advantage is a buying versus renting. And I see the comment. Yes, I did bold buying over renting. uh, every situation is different, but understanding the long-term financial impact is important. Renting, flexibility to move, maintenance is typically handled by the owner. Monthly payments can increase over time and no equity accumulation. Now, keep in mind, and I could run a graph here in a second, and tend to do this on our one-on-one calls, but you can see rent appreciation 8 to 10% year over year, right? So as you see that, you can see that continuously going up. Whereas when you own, you have opportunity to build equity, you have potential appreciation, greater control over your housing situation. So as payments, if you're on a 30-year fix, can change, and potential tax advantages. I'm not a CPA, I'm not an IRS agent. I'm not a tax attorney. However, there are deductions that if you go to IRS.gov or talk to your accountant, that would be able to benefit you there. So the goal isn't simply to own a home. The goal is to determine whether ownership aligns with your financial goals and lifestyle. So how homeowners build wealth. Most homeowners build wealth in two ways: appreciation, as home values increase over time, equity may grow, or it does grow, right? And that's compounded. So Albert Einstein has a quote: the eighth wonder of the world is compound interest. As you compound appreciation, similarly, I'm sure we've all heard stories about, maybe your parents or grandparents who bought a property for X number of dollars and now it's worth this, right? So over time, it appreciates. Principal reduction. As you pay towards your mortgage, you're reducing that principal of the balance of the home itself, which would then cause appreciation. So over time, homeowners build substantial net worth through a combination of both. Here's an example at $750,000. 5 years later, we then see equity from appreciation, from principal pay down, total wealth accumulation. Ready to do a calculation at that. I'm going to run a number real quick. Let me pull that up just so we get an idea, right? But you could see that net worth over 5 years equate to, in some markets, as high as 250 to 300,000. Now, I do a whole presentation when we speak with our clients, looking at their particular market, and we do have 5, 10, and 15-year wealth development. In a lot of markets, we're seeing a person purchase property for $500 or $700,000, and then their net worth going to roughly 1.5 to 2 million based on the appreciation of that market. So the key takeaway here is a home is more than a monthly payment. It becomes one of the largest assets many families ever own. So here's the advantages of buying versus renting: equity growth, right? As I mentioned before, you have the equity growth, and this is what we're looking at. There's a graph to show exactly what we are just talking about on that previous slide. So understanding credit. I do want to kind of point to credit because we do get this question a lot. And keep in mind, your credit score is incredibly important. The minimum credit score is roughly 600, and some go as low as 540. We have FHA, VA loans in that realm, right? So what we do want to see though is, guidelines. We want to show that your credit is able to withstand or able to be approved in underwriting. That's huge. We want to make sure that works out. So that's why these things are important. So there's no open judgments or tax liens. There's one open or active credit line in the last 12 months, right? Or at least one, should I say. If you do have derogatory events, we want to make sure that there's history there. Now, factors that can impact your score would be payment history, credit utilization, length of credit history, new credit inquiries, right? So small changes could often create meaningful improvements. And we've talked to quite a few clients over the years and helped them and guided them through ways to improve their credit or get a better credit score. Sometimes it's just looking at your credit report and seeing what your credit score is, and then saying, okay, well, let's say my credit limit is $1,000. Get that credit balance below 30%, $300. Really, I'd say if you have credit cards, look at each of them, go through each one of them. What is your credit limit and what is the current balance? Try to keep it under 30%. That alone is one of the things that can help boost your credit. So credit hacks actually work. Before buying, pay credit card balances down, as I just mentioned. Avoid opening new accounts. Don't finance a new vehicle or get a new auto loan. Keep making payments on time and don't close old accounts. If you have a credit card, keep it open. Let the bank close it for you, right? And but watch it in case there's any annual fee, of course. But those long-term credit accounts that you have open can actually benefit your credit score because it shows that it's open, but you're not using it. But it then creates an on-time payment history because there's nothing on it. So watch it those bills as they come in. Look at it if you can, at least monthly, and don't be more than 30 days late on any credit card or line of credit, auto loan, things of that sort. So, what not to do during escrow: buy a car, open a new credit card, co-sign for anyone, and move money around between accounts without talking to your lender. So loan programs made simple. This is just a breakdown of what's available. Now, conventional loan limits go up to 832,750 now. I remember when I started, it was 417,000, except for Hawaii and Alaska, which was 625. So we saw that because we do see, of course, appreciation in home prices throughout the country, right? Driving factors for that would be places like California. We do see Hawaii again. We do see parts of Nevada. So in some areas, what we call the high cost areas, like in California, you could see a conventional loan at 1.249. And keep in mind with these conventional loans, there are loan programs that allow for as little as 3% down. FHA allows 3.5% down as well. So there are various things that we could look at. Now, if you're wondering what a jumbo loan is, jumbo loans are interesting. Jumbo loans allow for anything over that conventional loan limit as high as $5 million. There are also first-time homebuyer programs and bank statement loans. If you're self-employed, there are loan programs that can fit your scenario that are specifically for you. And really knowing that when you're looking for a loan, the best loan is the one that fits your goals, not the one with the flashiest marketing. So how homeowners build wealth. So we went over that. I apologize, went back there. I don't know why, but winning in today's market, the strongest buyer isn't always the highest offer, right? So keep in mind with that, we have strategy. And this is my point here. Seller credits, they could often reduce the cash needed. Rate buydowns, lower your monthly payment, fast closings, they'll help stand out to sellers, strong pre-approvals, better terms, right? Better outcomes. That's just kind of the key takeaway here is strategy beats price more often than people think. And this will help you get set up if you're looking to get started in the home buying process. So as we say that, there are programs that allow for down payment assistance, which essentially is a junior loan that's used for down payment and closing costs. FHA, 3.5% down. In some cases, you could get that 3.5% from down payment assistance. Conventional loans, again, they could, with 3% down, you can apply. And if you qualify for it, 100% financing using conventional loan, right? So repayments typically due when the home is sold, refinanced, or transferred, or the mortgage paid off because it sits as a silent second in most cases behind that first loan. So keep in mind with that, there are income limits based on your geographic location, sales price limits, credit score, and debt to income ratio requirements. Now, as we look at down payment assistance programs, one of the biggest misconceptions in home buying is that you need a huge amount of cash saved up before you can buy. A lot of people don't get that you can get away with less than 20% down, right? So many buyers qualify for assistance programs that help with down payment funds, as I mentioned, closing costs, reduce cash to close requirements. And the programs vary by state, county, city, right? And there are quite a few in your state that we could talk about. And that's why, of course, when we have our consultation, we'll go over that. So potential options include state housing agency programs, local and city, county assistance programs, forgivable assistance programs where if you don't pay the payment or if you don't sell or refinance within 5 years, it's actually forgiven. And most folks are really surprised to learn that they qualify for the programs they didn't even know existed. So the key takeaway is, again, don't assume that you need 20% down or even 10% down to purchase a property. So here's kind of a chart. I screenshot this. I'm not going to read through each one because these are just kind of a national down payment assistance programs. Again, we do have ones in your state that are available, but this is just something to take a gander at, if you will, or look at, because it does give you some opportunity here, right? And just kind of make you think, all right, well, they're nationally programs, so they're also local programs that we like to discuss with our clients. So here's an example. Let's say you're purchasing a property for 700,000. The requirement's 3.5%, base loan amount, 675. You have the mortgage insurance, which is put on the loan amount. Here's your monthly payment, right? With just assuming tax insurance included. Now, keep in mind this $24,500. That is, if you're qualified, or could be, your down payment assistance. What does that mean? 100% financing. There are still closing costs, and that's why on that previous slide, before I started talking about this, we mentioned seller credits, right? Or the possibility of negotiating the price for a seller credit, seller paid closing costs. These are things that are available, right? These are things that could be negotiated with a solid agent in your market. And we'd love to introduce you to one of those, but that could certainly help, right? So state specific programs, as I mentioned, they in some cases allow for as much as 5.5%. So in some cases, they may cover closing costs. There are programs that allow for not just first-time home buyers to use the grant programs, right? It could work with FHA, VA, USDA, and conventional financing. And then in some cases, FICO scores as low as 640. I've seen them as low as 580, depending on the qualification of the buyer. Debt income ratios, which is the amount of money that you earn versus what you pay on a monthly basis, up to 50%. Not always the lower of that, which often tends to be the case with some of the programs that most folks know about. So again, eligibility is a big thing. And that's why it's important to really find out what works for you, right? And so the eligible property types may include a 1 to 4 unit homes, condos, townhomes, and manufactured properties. Not a mobile home, but a manufactured property where it comes with real estate. So there are community select eligibility programs or hero type programs, which are for those who are public servants, those that bless our communities. So that'd be medical and healthcare workers, law enforcement, medics, firefighters, those that work in education and other eligible public service or workforce categories. So here are the 6 steps of home buying. So escrow for most takes 30 days start to finish. With us, in some cases, we're closing within 14 to 15 days as long as we have everything set up. So it starts with that pre-approval, right? You start looking for a house. And so when you get pre-approved, we want to go over your finances to get you started, to talk about your budget, to talk about how high you can go. Yes, high five. Great to know. What do you want to spend? You start hunting for a house. Let's say that's week 2, right? Maybe you go into week 3, you enter into escrow, and then that's where you start the formal underwriting processing, where you order the appraisal, inspections, get your loan approval, and work to close the transaction. So as we go through this, the pre-approval, what we look at, review your income and employment. Again, we look at your credit, look at down payment, and then we get you pre-approved. But in that discussion, that's the discussion that we like to build out a presentation specifically for you that looks at a total wealth analysis. So you can see exactly what things look like to build your comfort so you know, hey, is this something you could do? Are you comfortable with it? How high could you go? Great. You're pre-approved for 2 million. But if you're only okay with 500,000, we're going to talk about that. Right? We want to talk about what's going to bless you, fit your budget, and meet you where you are. Now, house hunting, that's the next step. As I mentioned, there's hundreds of properties online. So we want you to connect with your agent, and if you need an agent, we'd love to connect you with one. You find a couple of favorites, you tour a couple of them, and you check them out. You come up with 3 sources or 3 choices. And you narrow it down to making that one property. So we work directly with your realtor to basically help you run through those numbers so you know exactly what that looks like. So you build a comfort on that offer that you're going to make. Once you get that offer accepted, the next step is, of course, making, as I mentioned earlier, a good faith estimate or good faith deposit, should I say, or the earnest money deposit. And so that's where you put in good faith, hey, I'm putting this into an escrow account with an escrow officer to basically be held until we close escrow. That's where you order inspections, appraisal. We're at that time underwriting the transaction. We gather your loan documents, underwrite and finalize your loan, and then you get final loan approval. If we have everything moving quickly, we could do this in about 2 weeks, as long as we have responsive parties. That's the key, right? So understanding contingencies. This is something that protects our buyers, but a contingency is something that, hey, I'm working to get this closed, but I have an appraisal contingency. I want to make sure this property appraises before I buy it, appraises for what it should, what I'm buying it for, and it protects you, right? The loan can same thing. I want to make sure we get a full loan approval. In most cases, we're actually doing this before you make an offer because it will help you be more competitive or help with negotiations. But a loan contingency will protect your loan on making an offer or in an offer situation where if for whatever reason the loan doesn't get approved for this specific property for whatever reason it may be, right, you're protected as a contingency. And then of course inspection contingency similarly will make sure that of course you investigate the home's condition of the property. So again, every transaction is different and will help you balance the protection with a competitive offer. And one thing we like to shine at is being as competitive as we can be when it comes to making an offer. So here's really what happens in the underwriting side of things, what we do, right? So we verify your income, review your assets, we verify your employment. The appraisal is then completed and the loan conditions, if there's any conditions like, hey, can you get me an explanation for this address that you lived at in 2008? We request that, right? Simple things. It's really not as hard as most folks think. We get final approval. So again, you could help. The faster documents are submitted, the smoother and faster the process. And our promise to you is that we communicate every step of the way and keep your home purchase on track. We're good at that. We like to check in at least once a day, answer any questions that you have, right? That's one thing that we're transparently really I think efficient in is continuously following up. If you're looking for houses, we want to check in once a week. How's your home search going? Do you want me to work anything up? While you're in escrow, we tend to follow up with you every day because we want to make sure your questions are answered. And it's the biggest purchase you ever make. As we hit that final approval, we want to basically work towards getting everything done, getting the loan docs out right. So this is that final step down here, and you're clear to close, which is that next step. So you're basically at that point, you're wrapping this up. You're not going to be alone. Of course, we're here for you, as I mentioned, every step of the way. So the final step is life after closing. We'd like to be your mortgage advisor for life. We're here to help you build wealth, create security, and achieve your goals. So as things appreciate, we're going to go over, hey, here's a report. This is what your equity is doing. At least that way you know what things look like and you see, okay, this is great appreciation. This is awesome. Building equity with every payment, we'll guide you through that. We could even do, we actually do a yearly check-in to go over, what's going on with your financial situation. If you're looking to refinance or purchase a property in the future, we want to be a part of that transaction. Really, what we want to do is help you grow your wealth. And if you're diversifying your portfolio in real estate, we want to be there every step of the way for you. So here are some things just to be mindful of. The biggest first-time buyer mistakes that I see is one is waiting for the perfect interest rate. Interest rates, I mean, they move all the time. The idea is what can we do to get you started with the purchase, that you're comfortable with the payment, and that knowing that when the opportunity comes to refinance, if rates are a little bit higher, let's say, we want to be able to take advantage of that, right? Mistake number two is assuming that you need 20% down. As I mentioned, there are down payment assistance programs or programs with as little as 3 to 5% down. Mistake number three is looking at homes before getting pre-approved. You want to make sure you know what that looks like. If you're looking at a house and you're going to make an offer on it, it'd be good to know what that payment's going to be, right? Number four is opening new credit accounts during escrow or buying a car before closing. And then, of course, number six, not asking enough questions. We like to follow up and answer any questions you have. And so most of the costly mistakes can be avoided with a solid plan and the right team. So I do want to answer your questions, but before I do so, I want to point out two QR codes here. One is the top box, schedule your call. And I'm going to record this. So if you check it out later and you're watching this, on posted on YouTube, and you're like, oh, wow, I could connect. Yeah, right there. You can schedule a call with me. And we'd love to talk to you about financing, what things look like, answer any questions you have. And if you'd like to get pre-qualified, talk you through that process as we did through this presentation. But if you'd like to already get started with your free soft credit check pre-qualification, meaning it's a soft credit check, it's not a hard check, it won't hurt your credit, but you can get pre-qualified. That's the link below for the application link. So you can do that as well. My contact information is also in the box to the right there. So if you have any questions on anything and you weren't on this presentation, or if you are on this presentation and you have a question and maybe you don't want to ask it in this group, I get it. Shoot me a message. I want to have a call. I would love to talk with you. I'd love to be there, talk about how we could get you set up and make sure that We really do work to get you the best thing we possibly can, really bless your situation and create a lot of success for you in your home buying process. So again, I'm going to stop recording this. So if you're watching this, thank you for watching. Let's get to some of these questions. There's probably a few here. So yeah.